Friday, October 28th. I have spared you costume. Thank your lucky stars. There's a lot of stuff coming down pretty quickly. We're going to get next week, a week from today, the job data report for October, and it can have significant consequences, but the big deal coming, no, it's not the election either. The big deal is underway. Mortgage rates have begun to rise. Long-term rates in the U.S. are now on a steady uptrend. We're hanging on to a spot with mortgage rates just above 3.5, but if we get more strong economic data, we're headed towards 4. But there's something else going on. As I have said here nearly every Friday for however many years, the outside world is having more impact on the United States, its interest rates and economy, than we are used to. Beginning almost 5 years ago, the Bank of Japan and the European Central Bank began their versions of the Fed's quantitative easing. And without getting any response from their economies, they kept going and went into ZIRP, which is zero interest rate policy, and by last year went into NIRP, which is negative interest rate policy. The leader, especially of the European Central Bank, Mr. Draghi, has been direct in the last 2 months, acknowledging that neither NIRP nor ZIRP has worked. They're not getting equivalent result from the risk undertaken. Yet the risk undertaken is damaging in particular to insurance companies and banks. To have all interest rates at or below zero means nobody can earn anything and they have to pay things. The result has been, as both the Bank of Japan and the ECB have backed away from buying bonds over there, with the money sloshing over here into our bond and mortgage markets, now that they're backing away, their yields have begun to rise above zero, and ours have risen in lockstep. The spread between the two is maintained. And I mean, some of our rise you could attribute to the Fed. The Fed will probably tighten by a quarter point in December, but I don't think it matters much. I think what matters here is if the Bank of Japan and the European Central Bank begin to get off of zero, our rates are going to come up with them, and then we go into another chapter of nobody knows what's happening. Many people complained that the Fed's quantitative easing hasn't gotten a result. The counter to that, especially here, has been, yeah, well, how would you know what it would be like if they hadn't tried? Now we're going to find out. There's no telling how far up interest rates could go here or over there. And maybe the most extraordinary question ahead is, what's next? And as the copy near this video fleshes out, what's next appears to be, especially in Japan, a stamp of a foot going on the pedal of government spending. And since nobody has any money, it means that the central banks are going to buy the IOUs that will result for the government spending, but short-term ones, not long-term ones. How that goes, nobody knows, but the interest rate worm has turned. We may stall out right where we are, but that would be the good news if we did. Be careful out there. Thank you.